Welcome back to the Rebel's Edge. I'm John Najarian. My brother Pete Najarian will be on shortly to discuss why the markets opened soft again and then started to rally back. And I think there's a pretty good reason. And guess what? It's not tariffs. We've got that and the rest of the market action right after this on the Rebel's Edge.
You're fine, Tesla. Tesla's morphing right now. It's in transition from being a car company to being a technology company. And you want to be
in a transition, you see, Pete. A transition.
What it's selling for right now. Don't worry.
Really?
You bought it. Hey, look.
And I love him. I love Jim Cramer. This is not me bashing him. I'm just saying, if you paid any attention to Pete back in 2019, 2020, 2021, 22, 23, 24, to this year, you've heard him say time and time again, it's not a car company, it's a tech company. And Jim Cramer is now saying, I think you guys in the club should understand that this is a tech company. And it's kind of like...
It is kind of amazing, John. I mean, it's one of those things where, even early on, even before 2019, there was times where I'd sit there looking at other guys on the panel going, this isn't just a car company. You guys all think of it as a car company, so you compare it to GM. It ain't GM. It ain't Ford. It's none of those others. It is a company that's literally, they've got data beyond words. They've been sucking that in forever. And then all the different companies that are part of this whole thing. This is a car company, but it's a tech company more so by far. And that's why I think it's fair enough that they've got the PE levels that they've always had, John.
Yep. And that's not me bashing Jim Cramer again, folks. Some of you are going to, perhaps, if you're haters, you're going to tweet it and say, see, even the Nigerians hate Jim Cramer. No, we don't. We think Jim is a great guy. I'm just saying that most people on that network have said forever just what Pete said just moments ago, that it's a car company and it should be priced like a car company. Mm-hmm. And that's why you should compare it to GM or Mercedes or Stellantis or any of these others, Ford. And the simple answer is they don't have the data that Tesla has. And by the way, does GM have an Optimus robot, Pete?
Not that I know
think so. There's so much that separates Tesla from everybody else that I think it's just kind of stupid. And I'm glad that Jim Cramer is recognizing that. So Pete, let's dive into the macro minute. Yeah. Because Donald Trump announced potential tariffs on pharmaceuticals and semiconductors. Why not? Which could escalate to as high as 250%. 250%.
It's a day that ends in day. Let's see, today, Wednesday.
It ends in day. There's going to be something about tariffs. Yep. But is that what's driving us up, Pete? Or is it Apple maybe that's moving up? Because Tim Cook wants to fight against the president until he doesn't.
Right.
He's already pledged 500 mil, and now he threw another 100 mil in there just to say, okay, well, what if I did this?
Yeah. Good move by Tim, by the way. That keeps him off the radar for a while, maybe. Yeah, there's a lot of reasons, John, that I think that you could look at this market right now and the bounce back that we got, of course, on Monday and yesterday, and a little bit off, but still nonetheless holding on to a lot of those rebound gains that we got on Monday. So I look at that, but I also look at the S&P 500, John, and I look at how many companies have now reported, and it's a pretty decent number. I think it's over 70% now. And then you look at, well, what's the beat rate? Well, it's 82%. I don't know that everybody expected to see the earnings be as good as it's been. And you and I have talked many times over the last few weeks about a lot of these companies. Yeah, some of them have missed. There's no doubt about it. But most of the companies, obviously 82% on the beat side, they're not just beating, they're crushing it sometimes, John. I mean, and it's been absolutely the opposite of what so many people were projecting was going to happen. So I think it's pretty interesting from that perspective as well. These beats just keep on coming. I mean, across the board. Now, that doesn't mean that there aren't a few that are slipping through there, because they are. But overall, we've seen an unbelievable earnings season this quarter again.
By the way, Pete, just to throw it out there, Tesla's profit per vehicle, according to the latest data, is close to $7,200. The average profit per vehicle at GM, $2,100. So you're looking at not quite 4 times, but certainly 3 times the profit. And then, Pete, you get into things like, those incentive bonuses that the government used to throw at them and that they used to be able to sell. Well, that's another reason. And GM sells almost no EVs. They sell some, so don't send me all the hate mail about, how the Cadillac Equus or whatever the heck it is, they sell a handful of those a year, folks. They don't sell many. Meanwhile, Musk is doing, what are they making, Pete? 400 and some odd thousand vehicles a month?
Yeah, not so bad.
All right. As far as futures, Pete, I'm going to say the price of oil, something that doesn't go into Tesla at all. The price of oil going up because there was a significant inventory draw reported last week. So once again, it's a level of about 65, maybe 66 to the barrel. So I'm going to say oil is our fantastic future today.
My fantastic future is going to be Rudolph the Red-Nosed Reindeer, John. And why is I say that? Because it's silver and gold, right? I mean, silver and
Yukon Cornelius.
Yeah, Yukon Cornelius. Year to date, John, silver is up 30.5%. Year to date, you're looking at gold up 31.5%. All-time highs for gold and silver, highest level since 2011. So I think it's worth at least pointing out that those two metals are doing extremely well and something to keep an eye on. And we're seeing a lot of option paper, particularly in the gold side of things, but in silver as well. So another reason why you might want to look at this a little bit more closely. Other than that, John, I'm going to just jump to the volatility index. You know what our range is today? It's something with a 1.7 in front of it. So it's 17 across the board. It's 17.25, 1780. That's kind of where we find ourselves. As a matter of fact, right now we've drifted below 17. Last I looked just a moment ago, 1684. So is that big move that we got on Friday still in the fear factor for the rest of everybody? I would say it's melting away pretty rapidly.
Absolutely it is, Pete. Well, let's take a look at Arista Networks, ANET. Because at the end of July, Pete, we had somebody that was willing to put a fairly large bet down that Arista would have a nice beat upcoming. So here we are, the 6th of August. So this is something that's basically a little over a week ago. The stock was 122-ish. As you see on the screen, unusual activity. 8,000, that's 800,000 share equivalent because every option's for 100 shares. Well, guess what? They came out and beat in a pretty big way, and it rocks to the upside. And this is a stock, Pete, that on the lows in April was down 46% year to date. Take a look at that stock today as it just runs to the upside. And that's why you want to be following the smart money, folks. And that's what we do every day.
It's not an option, John. You got to do it. That's
Not
what
an
it
option.
is. Not an option. John, when I look at this thing and I look at the earnings, they're up 38%. Not so bad. You look over at the revenue, that's up 30%. Not so bad. This is a company that's absolutely rolling. And here's why. Here's the deeper part of this whole thing. Who are their two biggest customers who are absolutely loaded for bear and wanting more and more and more and more? Let's see. It's Meta and it's Microsoft. So I'd say they're in the right spot, right time. This is a stock, John, that, as you were just mentioning, it's hit the 52-week highs. It's up 16%. They got a great balance sheet. Everything across the board I look at. Again, this is part of what we were saying at the macro side of things. They crushed it. They didn't just beat it. They crushed it. They move on, and they're going to continue to go here. I don't think this new high that they've gotten today, what is it, 137.90, I don't think that's the end. I think this is a stock that has plenty of room to the upside because of the fact that they're in the right place at the right time with the right other companies that are really looking for more from Arista Networks each and every day.
And again, folks, pull it up on your screens and go back to the beginning of the year and look at it dump. One of the most volatile stocks in the S&P 500. It went all the way down 46%. And now year to date, after today's run, and it's not over, I agree with Pete, it's up 26%.
Not bad.
You go from that trough to that high, and you're having a pretty good year. Even if you didn't catch the bottom or sell the top, you're having a damn good year. All right, Pete, let's talk to a company, and you tell me whether or not they're having a good year. Disney. Now, they're down today, and it hasn't been a red letter year for them. In fact, they haven't had one of those in a long time. Disney for the year is up 3%. Again, not horrible versus where it was at the lows in April, which was basically $81. So it's bounced off of that, not quite as nicely as Arista Networks, but it's bounced off of that nicely, Pete. And I think one of the keys that you're probably going to follow is that they just signed a new deal with the NFL for the draft rights broadcast, as well as some of their direct to consumer, which they're going to be doing DTC, as well as, of course, Disney Plus. These are big deals that they're signing, Pete, aren't they?
They are. They absolutely are. Disney, like you said, still down a little bit today, down 2 or 3%. But if it's you gave a year to date, I'm going to go full year, John. Full year, this is a stock that's actually up 27%. Now, they had that big dip and everything else. That's why the year to date numbers look a little different. But for 1 year, pretty nice performance, actually. And, you look at everything across the board. One of the things that stood out was that they raised the profit outlook for the parks, John. So the parks are making a bit of a comeback. That, I think, is pretty important. This deal with the NFL, I think, is a really, really smart one. Now, they have some bad deals, too. That deal with the NBA was the stupidest one I have ever seen, maybe of any company, as far as just wasting money away, John, because the amount of money that they decided to give the NBA and then the numbers that are actually they put up, not pretty much anything good at all you could say about that. That part's been absolutely terrible. But this DTC, like you just mentioned, and you look over at Hulu and some of the other factors that they've got going on, ESPN. So Disney is a monstrous network of different types of companies all within one. So there are some that are doing great, some that are not doing as great. But I will say this, it feels like they're finally going in the right direction. It has that feel. So we'll see, John. And I like this most recent buy they did with the NFL. I think that one makes a lot of sense. They got a lot of eyeballs on there from the NFL network, and that's something that I think ESPN needed and Disney needed.
Well, what about Snap? They need something too, Pete, because Snap is down about 19% like that. And shares are down because disappointing Q2 results and disappointing guidance. You can't do both. You could have disappointing results and maybe they hit you for 5 to 8%. But if you guide lower, that's how everybody's pricing where it's going to be in the future. This is just a horrible number. Adjusted EBITDA down 25%. That is not good in any way that you could possibly break that down, Pete. So the shares are down hard and people are hitting the exits with their elbows.
Yeah, down 19, 20%. What it depends on when you look at it. Year to date, it's down about 30%, John. They missed on the earnings as well. They lost 16 cents. They were looking to lose only 15 cents. That part's less important than what I'm looking at with the revenue that you were just pointing out. And the problem is they just don't have the kind of growth that they need to have. I mean, year over year, their growth was 9%. I'll give them all the credit in the world for that because that's the number that I always like to look at, John, as opposed to, just the numbers that are out there that are the estimates and everything else. But it is up 9% year over year. But here's the problem. You know what Meta's numbers are? If you want to compare that to them in terms of the revenue, Meta's up 22%. And then I look over at Reddit and I see them. They posted revenue up 78%. So the problem right now is that Snap doesn't have that kind of growth stature against what we are seeing from those others. And because of that, it's getting punished. And I think it's getting punished for the right reasons, John. This is another one of those where it almost falls into that meme stock sort of category where people, when they're buying it trying to squeeze out the shorts. But other than that, there's really not a whole lot of reasons you could stack up there right now to say, oh yeah, Snap looks like a great buy, unless you're trying to look for that short squeeze.
Well, Pete, when Elon Musk bought Twitter with his cadre of investors, this was a 40 some odd dollar stock. Now it's $7.50. So yes, you are right. Reddit's eating their lunch. Meta's eating their lunch. Twitter is eating their lunch. And everybody wanted to say what a fool Elon was for that, Pete. but he got all the data again, just like we talked about with Tesla and the data for the cars, for self-driving and all the rest. They got a ton of data from Twitter, and it just continues to build over there. And meanwhile, Snap, it might not be around too much longer, Pete, if they keep losing money at this pace.
Yeah.
All right, one more real quick. SCMI, super microcomputer, shares also down hard. Revenue outlook, short of expectations. Guidance, not good. So this one just getting cracked, Pete.
Yeah, they talked about their costs are driving higher, John. They missed on the earnings again. They seem to always miss on their earnings, it seems like, anyways. When I look at it, the earnings are weak, and year over year, they're down significantly. Everywhere I looked in this one, not so great. And this is a company that a lot of people love this company. They're always talking about it, and it's had this great move to the upside. Well, it's down about 20% today. That's not so great, but it's still not that far off of the 52-week high, $66. It's trading 45. So I can give them credit for one thing. They're still well above those lows at 17. But outside of that, John, there's a lot of shorts in this stock. I wonder if today's a day where we see any of those shorts start to nibble back in, or are they thinking this thing got a lot more room to the downside? And depending on how that plays out is really what's going to determine where this stock is over the next week or two. Do they want to start covering some of those shorts? I think that some of them they might start getting a little bit interested in that. But if you look at the numbers that were put up and you look at some of the previous numbers they've put up, not so great for SMCI.
Well, somebody who's got beat up almost as bad as super microcomputer, Pete? Shedeur Sanders. And maybe it's about time he's going to get some love. But the Cleveland Browns just are not in love with him, or they're trying to stress him. And you know what they say about stress, Pete? That's how diamonds are made. That's what they say. We'll see if this turns Shedeur into a diamond. Take a look and a listen,
anything not to play Shedeur. Everyone knows the story by now with the draft. The Browns never wanted
It's still
Sanders,
amazing
and now
he's
it
the
seems
fifth
like
rounder.
they're trying to sabotage his
Wow.
career. Let me explain. First, they just released their unofficial QB depth chart, and where do you think they have Sanders listed? Yup, that's right, last. And if you're thinking it must be based on performance so far in camp, you'd be wrong, because here are the
You'd be
stats
wrong,
from
'cause
all
look at those
four
numbers.
QBs so far
Those
this
are
training
impressive
camp.
numbers.
Sanders has not
Yeah.
only not been the
Twice-
worst, he's
twice
been
as
the
many
best,
touchdowns.
but he's last on the depth chart. Make
No
it make
picks.
sense. But wait, there's more. It gets worse. Now
But
two
wait.
of the QBs ahead of him got injured. Okay, so you're thinking
Two
never want to
QBs,
see anyone
Pete.
get hurt, but now Shedeur will have a chance to move up and possibly prove himself as the number 2. Nope, wrong again. Because instead of doing that, which would have been the obvious choice, the Browns decided to bring in another QB to make it even harder for him. And no disrespect to this man, but it's not like they're bringing in Josh Allen either. Enter career backup Snoop Huntley into the mix. The Browns just love themselves a mid QB. So now they have Flacco, Pickett, and Huntley to go along with their 2 rookies. Add in Watson, and they currently have 6 QBs on the roster. All of that comes
Watson's
right
still
after the owner
wherever
made
he
these
is.
comments about Shedeur just the other day. So if this is the Browns' plan, just trade him or release him and give him a real chance to earn a job somewhere. Because in my opinion, with what they're doing in Cleveland right now, he's got no chance.
It is
I don't
kind
know
of-
that. I don't know if it's no chance, though, John. I really don't. I
Well,
look
he's
at
going to
it.
start. Pete,
Yeah.
he is going to start. I mean, because the owner can say what the owner wants. The GM can say what he wants. The coach knows that if he doesn't win, he ain't going to be there long. I
Right.
mean, like the country western song says about life, it's not for long. And he ain't going to be there long if he starts somebody who is less impressive than Shedeur. And I'm not saying Dylan Gabriel is less impressive. I'm not saying that. He might be on a par with him. The stats don't bear that out yet, but
Right.
maybe he is. Maybe he is. But nonetheless, he is going to get his shot.
He's going to get a shot. You've got injury. I mean, it's actually, John, in my opinion, this rolls really, really well for Shedeur. Now he has to perform, though. And I think it's why just yesterday, we were talking about this guy and the fact that he didn't want Dion coming in there and interrupting and everything else that could happen because of his celebrity and his status and everything about him. So, and I think the world of Dion. I think he's fantastic. But I think when you really break this one down, John, if Shedeur gets this, and he will, but they're going to be practicing against Carolina already. So that's a big deal. And I think that's going to be really, really interesting to see how this whole thing kind of plays out. They're going down to Carolina. They're going to be doing those dual practices that they do. And they're pretty aggressive, to be honest with you. So he'll get an opportunity now, more so than he's had the entire training camp, because they've got injuries, they've got age, they've got other quarterbacks they're bringing in. This has got to be the most quarterbacks on anybody's roster in the entire NFL, because, you know, you almost forget some of them, John. Some of them have been on, you know, injured reserve. Some of them are banged up now and whatever else. There's 6 of them in there. I think there's 5 or 6 at least.
Six.
So,
Six.
yeah. So there's a lot to be said about that. But if he can go down there and look good against the Panthers, who usually have a pretty good defense at least, and they've struggled on offense and the quarterback and all the different things that they've got. But it could be pretty interesting. And this is his chance, in my opinion. And I don't know how many chances you get like this, because the opportunity is there. It's just put out. The platter is out there, and now he's just got to take it. Because if he goes down there and puts up some nice looking numbers, like the numbers we just saw that he's got already in camp, this is a guy who's not going to sit at number 4 or number 5 or number 6. This is a guy who starts to elevate up, I think. What do you think?
Yeah, I agree 100%. I think he is. Plus, there's no stage too big for him, Pete.
Right.
Growing up under his dad, getting all the accolades and all the money out in Colorado, and turning that program around. I'll give more credit to his dad for that, but certainly he was a great quarterback that was considered a front runner for the Heisman as well, and had the record, I believe, for Division I quarterbacks in terms of passing percentage and all that kind of stuff. He's the real deal. So the stage is not too big for him in Cleveland, of all places. So I think he is going to get out there and perform. And if the rest of the team performs around him, Pete, this might be his job for a long time.
Yeah, could be really interesting. I mean, this is laid out pretty nice for him. The only thing, I just want to hit one other topic real quick, which is this whole ESPN deal with the NFL Network, and all the things that go along with that, John. The NFL gets 10%, blah, blah, blah. But I think this is a really smart move finally, because like you and I talked about earlier when we were breaking down Disney, they've done a lot of things wrong. They waited way too long to go into the streaming world. They did a lot of things that they could have done, like, for instance, John, long ago, Disney probably should have bought Netflix. That was something you and I talked about on a 4-letter network, you know, years ago, when it was trading like $60 and never happened. And that was a huge mistake, because they've been behind the 8 ball ever since. But this buy, combined with Disney and Hulu and all the rest of these things, the streaming services, I think this is going to be a home run for ESPN, because that red zone, and they can throw all the money in the world that they want at it still, John, but that red zone is cool. There's a lot of other aspects of it, along with, you know, the draft and all the things that come with this whole NFL Network thing. I think this is this one makes a lot more sense than any of the other acquisitions I've seen them do.
Yeah, and they gave them stock, Pete. They gave them 2.2 to 2.3 billion, depending how you value 10% stake in ESPN. And eventually, they're going to spin out ESPN from Disney, Pete. Eventually. I know we've talked about it for a long time, and Disney is very slow to move on these things. They love buying. You know, they loved buying Star Wars. They loved buying Marvel. They loved buying, what was it, DreamWorks, Pete, or whichever one of the cartoon networks they bought. I call them cartoon, you know, it's animation and so forth. They bought one of them. I don't even care which. But they love buying things. This is something they bought with stock. And it's a good deal for the NFL Network and for the NFL. And it's, I think, a great deal for Disney, because this is a deal they needed to do, because unlike the NBA that Pete just lambasted, the NFL is a huge draw and will be for, you know, decades likely to come. So I agree, Pete.
Yep, and they got a deal, $29.95, as they've already put out all this stuff, what the streaming services are going to mean and what it's going to cost, and the direct-to-consumer and all that. So this is just like a bolt-on, and they're ready to rock and roll, John. And I think it's something that really could be a huge generator for what we're seeing coming out of ESPN, but specifically even underneath Disney itself.
Well, folks, we will be back with another Rebel's Edge tomorrow at 1 p.m. Eastern Time. We hope you join us then. See you tomorrow.
Bye.